Check, 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 check.
We can hear you, Hans. Good morning, everybody.
Hans is here.
Good afternoon to our
the
friends
Canadians.
across the pond. Good to see everybody. Happy Monday. Welcome to the Ticker Highlight Show. I am Mark Sebastian. I am your only option. I'll introduce my cast of characters here shortly, but I want to first remind everybody why we're here. So each week, myself and my incredible team of traders get together and we break down a stock that we like and a stock that we don't like each, and then we form that into one singular trade idea. And if you've not looked at what we've been doing here at Ticker Highlight Show, I would just invite you to take a gander. Here, let me share my screen here. I mean, it's been pretty phenomenal since the middle of April. We're on a pretty good heater. We did Walmart last week and closed that one for 61% in 2 days. 137 in Walmart. The previous 2 weeks ago had a nice winner in Google, NXC. I mean, just over and over again. The times where we've really lost has been buying puts. And that makes sense in a market that's gone straight up. But, that doesn't mean you should never buy puts. Let me be very clear. And so this is what we do. And I just have an incredible group of traders with me. Andrew is our director of education and volatility trading. Hans is our director of income trading. And Leslie, your queen of the candlesticks. I just call her the queen. She is our head of technical and charting. So with that, let's dig in. Folks, I want to remind you to continue to check your email boxes, add to calendar. We've got, we got something I think fun planned for later in the week. So make sure you're watching those emails and getting ready to join us. So just keep an eye out there. All right, let's talk about this market. So we got the Federal Reserve last week, lowering rates and setting a path for 2 rate cuts this year. Not a lot of economic news this week. It is pretty light until we get to Friday. Friday, we do have PCE. We're still several weeks away from any more earnings of any consequence hitting us. So the market is kind of in a vacuum unless it is created by Washington for the next few days. So given that and knowing kind of the path the market has been on, I like it higher. Of the group of the major indexes, the S&P, the Triple Q, the diamonds, I continue to believe the Russell 2000 is going to be your leader for the next quarter. These are interest rate sensitive stocks, highly interest rate sensitive stocks. This is the one index that hasn't fully pierced a new all-time high. It has, I believe, closed at an all-time high, but it's actually traded higher than that close. And when you look at where the rest of the indexes are relative to their highs from last year, which is what Russell's trying to get over, they're all pretty darn clear of it, except for the Russell 2000. So I think you're going to see some rotation into here. And the metrics with what's going on with interest rates makes owning the Russell 2000 a pretty darn smart idea. So keep that in mind as you're trading is these small names that have a little bit more of a debt load, they're going to do really well. So who's going to be some of the losers? Well, I want to start with one we looked at last week that I really do think might be getting ready to, every time I think it's getting ready to roll over, they get a little pop. But, it has shocked me. This is Lockheed Martin. And it was trading around here prior to its last earnings in July, which were awful. And since then has recovered the entirety of it. What has changed for Lockheed that where over the last quarter where we saw the stock drop from 460 to 410, about 12% in a day, and then just run it all right back? What has changed? So the chart is probably going to tell us we got to wait a little bit longer, but this is one I'm watching very closely as a potential short. On the long side, I want to look at the mid-cap banks. They've had a nice little run in the last 3 months, but much like the Russell relative to the S&P, these mid caps, especially the large mid caps that have serious footprint, have been kind of just underperforming and sitting in the wind. These interest rate moves should help a lot of their books and a lot of their holdings. So a lot of these firms are holding a lot of holding a lot of treasuries that are at a loss from the move in interest rates over the last couple of years. Interest rates starting to pull back, interest rates starting to calm down, is really going to help these groups' balance sheets. This is KRE. Now, of this group, I think the best balance sheet of the mid caps that are also really big is Fifth Third. Fifth Third has a pretty good long-term portfolio, unless treasuries in some of their short. Pretty rock solid balance sheet. Kind of boring, but I think that there is some real potential upside in Fifth Third. You could also look at like a Comerica or a even like a Key Bank as potentially interesting plays for this. But I kind of like I think Fifth Third probably is the strongest of this group. So thus, I am pitching long Fifth Third Bank. So those are my two ideas. Let's roll this one out to Hans. Hans, what names do you have for us? I know we're all on board kind of with this Russell theme right now. There are other themes out there, but I like the Russell from a portfolio construction perspective. What are you watching today?
Well, I'm talking about semiconductors a lot lately, so it's kind of I kind of thinking that there may be some plays within that sector. So right now, I feel like even though this is very much a story market, and stories are really driving a lot of things, we can't completely disregard some elements of fundamentals. So I was kind of thinking, certain stocks like Broadcom have really, really run quite nicely. So I would say you could cycle out of something like a Broadcom. So that would be one to not love as much right now. There's no question it is absolutely crucial. No Broadcom, no data centers, right? So that's how important they are. They are quite simply a very integral part of that whole build out, which is going to happen around the world nonstop for the next few years. There's just no two ways about it. We've seen enough evidence out there, Oracle, left, right, and center, that this is just continuing and continuing. If anyone thinks, I hear people say, well, AI is a bubble. Well, okay, there are going to be stocks that get a little exuberant at times, but if you think AI is done, you're completely in another universe at this point. So, come on back to our universe. This is where things are actually starting to change in ways that we haven't seen in, almost in decades, certainly since .com, but it's bigger. So that's my AI spiel. But what I think is there's some areas that are under, kind of underrepresented in a way out there. And one of them is Micron. I really love Micron because one of the things about AI, we've seen some storage names do very, very well. Some of the WDCs, which I think was one of my recommendations. So these areas where we're going to be creating, and I talked about this months ago on the Special Situations AI. I said, listen, there are certain areas you can really sink your teeth into. And one of them is the build out. We need the infrastructure built. And the other one is really all this data that we're going to create. We are in this inference phase. We are creating data on a scale that we just can't even imagine at this point. It literally is good. And it's just starting. It's the first pitch of the first inning. We might even be on our way to the game at this point in terms of how this is going to play out in the economy as more companies pick their solutions, their AI solutions, and put this stuff to work. What does that mean? We're going to be just generating data, not all of it good. It's going to be just a waste of time, probably half the time, but that doesn't matter to the people who crunch data and store data, right? They don't care what you're using your data for, whether it's successful or not. You need somewhere to put it, crunch it, analyze it, make sense of it. And so the data companies are interesting. And storage is very much a part of this inference phase, right? So think of Micron as creating the technology. It's almost like a backpack for your GPU. Your GPU is integral to all of this, and it can't think. It's kind of like if you were trying to think, if you tried to kind of work out a complex math problem, imagine that you couldn't remember what you thought 2 seconds ago. You're never going to get through that problem. You're going to be like, what? I don't know where I am. That's kind of like a caching thing, kind of like what Cloudflare does for the internet. You've got this backpack that kind of keeps this information handy as you're sort of, as the gears are turning in these GPUs in this inference phase. So I love that area, and it's trading right around its 10-day forward PE, whereas AVGO is like off the charts, way above it. So I'm starting to look at little interesting things. I know it's a story market, but I would feel more comfortable, and I'm starting to position in things like Micron just to kind of play that next phase of, well, maybe a memory is not as appreciated and it should be. So those are my one to love, one to leave.
There you go. Now someone's mentioning you put that you had Broadcom in your that was one that you've been a huge proponent of over the last 3-4 months. You're not saying that this stock is going to hell in a handbasket. You're just saying maybe it's time to take a little breather and, wait for it to maybe take a little bit of a step back and then jump back in. Is that correct?
Exactly, Mark. Exactly. I'm saying I want to find the next Oracle. You know how Oracle came out and it moved 5 times the expected move because everybody went mind blown, right? So I want to find the ones where everybody goes, oh, man, I thought this game was all about NVIDIA and Broadcom, but wow, there's this company over here. So I think there's going to be a lot of opportunities like that where we're like, oh my goodness, what happened there? And this could be one because the valuation, kind of like Google right now, it's just a good valuation. So it's hard to get bearish on it. And they're taking over, AI in many ways. So that's kind of what I'm saying. Maybe we have that opportunity for like a little under the radar, not as sexy, but companies that are going to still do very, very well.
There you have it. And let's roll it to our own SIBO alumni. He is
earnings, though. Mark, I failed to mention, I believe earnings are tonight. So this is going to, this is a reality.
Tomorrow night. Yeah. All right. So might want to wait until that one kicks through. Yeah. So let's kick it to our own Viking of volatility. He is our director of education. He is Andrew Giovinazzi. What do you have for us this morning, Andrew?
Well, it was funny because when I was writing up last week, I'm like, I don't know about this one. My short pick of the week was Broadcom, and it was on just because it had run so far so fast. It's not that I don't think it's a great company and it makes lots and lots of money. It totally does. But I mean, you look at how the valuation has changed in the last month, and it's up 40%, almost 50% in a month in 3 months. So, of course, last week, I write these up on a Wednesday. Broadcom's trading 360 or whatever, and today it's trading, 343. So
still carries an 87 price earnings ratio, which is pretty.
I know, and it is a again. From this point of view, it's relatively expensive. Company, and I just think sometimes tech, it gets overbought for a little bit. That's all. Would I short the farm in AVGO? No, I would not. But like Hans says, you're looking for the next Oracle, not the one that's already had an Oracle-like move. This is what AVGO did. This is what Oracle did, and they've all pulled back from those what I would call quite lofty valuations. So another thing I've noticed is volatility here in Broadcom. I mean, it has come down now. So I believe it's starting to settle somewhat, and there's less reach for the options. So when these stocks were hot, people are buying calls, buying calls. And then when that started cools a little bit, I think that's just, less volatility in these hot names generally means a flatter to down performance because nobody's really buying calls. So that's what I would say for AVGO. So when Hans said this, I was like, oh my God, Hans is like done with AVGO for a while. But he's also was recommending it like $100 and something ago. I mean,
Yes.
you got to be realistic here. 240, 340. I mean, it's had its run. And again, he rides that stuff in income.
Turbo income,
The stock turbo income and the stock that, okay, this sleeper, this is a theme for me right now. And I kind of got the idea from Leisha at the beginning of the year. I was just waiting to see because all the drug stocks got killed at the beginning of the year when RFK Jr. became health HHS secretary. And now, he started, kind of pushing at Pfizer. There's less COVID, drug mandates, all that stuff, or less vaccine demand. So, I could see when HHS was going counter to something like the drug companies were getting hurt. On the flip side now with MAHA, Make America Healthy Again, a lot of these companies are like, we're going to roll back the dyes. We're going to roll back the additives. We're going to roll back all of these, what I would say is stuff that I really don't eat. But so on this flip side here, Tyson, I believe they announced they are cutting high fructose corn syrup out of their products. So this is a push. I think this healthy push, to be honest, they'll be able to charge more money. And the companies will do better. Now, this is early stage. What I do like here again is stock going lower. You're getting a little press up in option prices. Not a huge press up, but you're getting a little press up. And let's look at 3090. So, all of a sudden, little longer term options here, little interest. Okay, this is from call buying. This isn't from put buying. So I, like Mark and Delta Strike, there is something to following this order flow. Flash 5, Flash 10, option fingerprints. You now clearly you want to see that interest. So you want to see big institutions come in and start to buy. So anyway, this is I would say a longer term play. This is not a short term play. This isn't an AVGO. It isn't a hot stock, but it is a stock that could be $53, maybe to $65 by the end of the year as these things grow. So it's a longer term play. I don't know if it's great for us in particular here, but I wouldn't mind a long term play in it. But I do like volatility kind of coming up here a little bit more and starting to make that move higher. So anyway, this is my.
I love that. I love that, Andrew,
Really,
as a sign of excitement, right? When you start to see that little bit of excitement playing out in the options, that can be a nice tell.
Yes, absolutely.
Yeah, I mean, it's worked pretty well for me in Flash 10 and Flash 5 overall. So you like seeing, especially when stocks are here, they're at, this is very close to a multi-year low here. I mean, we bounced off a little bit, but if you look at like a 5-year chart, Tyson pays a huge dividend, $2 dividend. It's not like that people are going to eat chicken. Sorry, but from a commodity play, it bottomed here, but we haven't seen anything like the prices and the multiples it got, a few years ago. So anyway, that's my long-term long play for Tyson. AVGO, my short play, again, I would have like a put that's closer to the money in there personally, but with a fairly tight stop because it is still part of the AI backbone and when everybody gets hot for it again. But I mean, you have to think some of those valuations here with the Q at 600 are starting to it's getting a little pricey. It's getting a little pricey. There you go. That's my take for the day.
My turn.
All right. And now with that, let's kick it to Leisha, of course.
So my choices were Boeing to the downside, which I think is still going to happen. It's consolidating, and today, remember, when you want to enter, you want to wait for the stock to reveal itself and clear those most recent highs or lows. Boeing's just about ready to do that. I think Boeing could drop down 197. NVO was my bullish one, and sure enough, it moved the next day after I wrote about it. I wrote it right here, Wednesday. The next day, I was up like $4. Right now, it's closing the gap. I wouldn't do anything in here yet. I'd say we need some more information here. So my long is kind of out, Boeing possibly to the downside. I think we can rule out Micron, Mark, because the
Earnings. Yeah, we're going to play with
but
earnings.
I like it also, Hans. Close the gap, and looks like it wants to continue in the same direction, which usually happens when you do close the gap. So I think that looks like a really strong chart. Two of you had mentioned Broadcom. I'd say a short term, possibly a little pullback, but you are going to have support there at the gap high there, 331.62. So that's a good $11 for some puts. Make sure this doesn't. Could have been a Dragonfly Doji here, but you're not getting the confirmation. So maybe it does want to come back down and test this. So I'd say like quick short-term puts possibly, but $12, $11 is a really good move. Mark, Fifth Third totally makes me think of your dad. He used to love that stock, remember?
Yeah.
I like it too. It does it has to clear this resistance up ahead, the median line and 46.5. You do have support here with the 21-day. For me, I'd have to wait. You know me. I always like to.
I find it confusing. Is it fifth? Is it third? Fifth, third?
Yeah.
It was actually a merger between the fifth bank and the third bank.
There you go. The fourth one was overlooked. Fourth one was overlooked. What happened?
They couldn't take the average. They couldn't take the average. Everybody. I mean, come on.
The average would have been good. You're right.
Oh my goodness, I'm having
LMT.
Oh, that's right.
I think that one looked probably.
Oh, and Tyson. Tyson looks good.
Tyson,
Tyson's the one I'm really interested in seeing what you see there.
Mark, I think you're right. This has had a really nice run. I do look how many times it couldn't trade above here. So wait, 482. If it rolls from there, this is significant. My pitchfork resistance lines up along with those highs. So this could become a price target and possibly a place where it will roll over. So watch your RSI roll back lower. So maybe a little higher from here, but there's definitely resistance up above. Tyson, you could be right, Andrew. I have support here on the median line. It is a little downward sloping. I just threw this up real quick while you were talking, but it looks like it might try to get off the mat here. I think maybe clear these recent highs though, 54.30. And then
I'd like to see it. I'd like to see it kick a little money.
Yeah.
But it's done better since the announcement. I believe it's been up. So
But,
we'll see. I like a little bit more momentum, maybe.
Yeah.
I wanted to mention something, guys. If all the viewers, if you're not paying attention, even if we make a pick, Mark makes the pick, but these are all interesting ideas. My pick last week was Upwork. It ran 20%. My options doubled. You want to pay attention to all these things. Put them on your screen. Put them on the radar. We don't want to give you 7 different trades, but the track record is pretty phenomenal all across the picks. So definitely open that email and pay attention because there's always something interesting going on, and we're trying to bring it to you.
Absolutely. Put them on your watch list. Put them on your everyone should have a watch list that they carry. you think something's going to happen? You wait for it to move over that resistance or hold that support? Do you add it to your watch list?
You know, here's why I'm going to go with Tyson a little bit early. All right. You guys all know I like order flow and large block paper, right? So on an average day, Tyson, the average daily volume of Tyson Foods is about 800 calls. Believe it or not, everyone knows the stock, but it really doesn't trade that much. Average total volume is 1,300 contracts a day. Today, there have been 6,500 calls alone on the October 55 calls.
Ooh, way to go.
They're basically telling us Andrew's right. Now, there's
It can happen. It can happen. It can happen.
Mostly buying so far today. They've net bought, $140,000 worth of call premium. So, and which is, on a slow moving stock like this one, that's something decent. So what I want to do is look at the Tyson October 55 calls. I want to pay 85 cents for those. We don't need a huge move for these to win. They're pretty inexpensive. So I'm gonna type this one up in our portfolio here. You guys on board with that?
Sure.
I am. Yeah, they've bought 6,000 of them.
Yeah, I'm not one to. When we say they, we mean hedge funds, money managers, traders that don't buy 5 contracts like maybe me or Andrew do, but people that buy 5,000. When traders are putting that kind of money into a trade, there is a reason,
right?
And that is what we're seeing in Tyson today.
Yeah, and no dividend until December in there either. So just as a reminder for people.
And no dividend until December. So we're going to buy to open the TSN October 17th, 2025, $55 calls. We used to call this double on the floor because 55 was
double
too hard
nickels.
to say, I suppose.
Double nickels.
Yep.
I'm on, Cutie.
And so there I'm going to get this alert out. We're going to target like $1.50, $2. A lot of times you're not shooting for a 200-300% on a name like Tyson, but the money might come a little easier. So, what you'll see below me is that.
I'll put it in the chat to open and pin it.
Is that it is now in the portfolio, and I can drop it in the chat. It's fine. And now you can see trades that we are seeing. Is the TSN October 17th, 55 calls for less than 90 cents. I'm trying to pay 85. But we got a lot of people here. I want to give people some leeway to pay up to 90 if they feel like it. So there you have it, folks. We have yet again delivered a top stock pick to you guys. And we do not sound out alerts to close this, but I will let everybody know when I close it in this chat room. I'm going to drop in an announcement. I am closing my calls. But again, I'm targeting like $1.50 on these. So
About a double.
Your own managing this, but I'm targeting about $1.50. Maybe leave a flyer to see if something takes off. All right, everybody. That was the Ticker Highlight Show. Join us every Monday at 10 a.m. Eastern Time as we deliver one singular stock pick from 8 great ideas, in this case 7, because Andrew and Hans both had the same idea, from 8 great ideas, and we filter them down into a singular trade. So for our Imperial Overlord of Income, Hans Albrecht, the Viking of Volatility, Andrew T. Giovinazzi, and of course, your queen and mine, Alicia J. Leslie, I am Mark Sebastian. I am your only option. I hope you have a good one.